Investment in securities market is subject to market risks. Read all the related documents carefully before investing.
How much should a typical Indian family allocate towards listed market equities?
For deciding on the exact equity allocation, many people use a simple rule of thumb. So you just take the current age, 100 minus at current age, that can be used as a.
Why do you think every investor who's watching this podcast, why should every investor very seriously consider a significant part of their portfolio for allocation to equity markets?
Equity market, which if you can represent with the Nifty 50 index, has generated returns of around 12% per year, roughly. So this means that someone who had invested, say, suppose 100 rupees in December 2012 would have seen their wealth compound by roughly 3 times over the last 10 years, and this is from December 2012 to December 2022.
Hi, I'm Saurabh Mukherjee, and it's my pleasure to welcome you to Guru Mantra with Saurabh. This is the first podcast of the series, and I'm joined by my colleague Krishnan. Krishnan works in Mercedes's investment advisory division, and our job in this podcast and in the subsequent podcast will be to take you through some of the central tenets, some of the central facets of equity investing in India. In this first podcast, we will focus on the importance of equities compared to other asset classes in India, right? So if you look at the Reserve Bank of India's data, the RBI has repeatedly said that 95% of Indian households' assets is in physical assets, gold and real estate primarily. Now, Krishnan, this is no secret, right? It's well known that Indian households love buying gold and real estate, and whilst courtesy podcasts like this and courtesy sorts of books that I've written, Coffee Can Investing for example, there is growing awareness of equity investing, but even today equity investing ranks way below equities, way below gold and real estate in the pecking order, right? Why do you think every investor who's watching this podcast, why should every investor very seriously consider a significant part of their portfolio for allocation to equity markets?
Sure. So if you look at the data over the last decade, right? So Indian economy has grown at roughly around say 10% per year, and during the same period, if you look at our listed equity market, which if you can represent with the Nifty 50 index, has generated returns of around 12% per year, roughly. So this means that someone who had invested, say, suppose 100 rupees in December 2012 would have seen their wealth compound by roughly 3 times over the last 10 years, and this is from December 2012 to December 2022, right? So roughly 12% annualized return per year, right? Now, if you compare these returns with say the returns, which or returns of investing in gold and even fixed deposit, which is in fact favored by most Indian investors, these have returned around 6.1% and 7% per year respectively. Again, we are talking about like for like over the last 10 years. So over this 10-year period, this 2012 to 2022 period, annual inflation in India is roughly average around 5.8%, right? So among all the asset classes, only equities would have generated meaningful inflation-beating returns and compounded investors' wealth in real terms. When I say real terms,
I think we can make an even bigger point, right? So, आप 10 साल का data दे रहे हो. If you go back to say 2002, 20-year compounding, the 20-year compounding in Indian equities will be in the range of 16-17x. So 12-13%, 12-13% over long periods of time as compared to inflation, which is 5.5-6%. So therefore, real return, nominal return minus inflation, real return Indian equities has given in the order of magnitude of 6-7%. Right? How does that compare to other asset classes, Krishna?
So again, like I said, I mean, when you look at the real returns, so I talked about the returns for gold and the fixed deposit, 6% and 7%. Right. Inflation barely,
zero के आसपास real return आ रहा है.
Right. So the real returns are very small when you compare to the real returns delivered by equities, listed equities.
And I just request our podcast listeners to keep in mind that Indian equities में typical households allocation is barely 2 to 3% of the household
Correct.
wealth, and it's astonishing that the only asset class which is generating hefty real returns, household allocation is a mere 2-3%. Carry on. You were talking about the returns generated by other asset classes.
Right. So, so one of the reasons why equities deliver higher returns for people who are listening to this podcast is it's simply because it's a higher risk asset class, right? When we say higher risk, essentially that means it's more volatile. So if you are invested in equities, you are prone to see more fluctuations in your the invested money, and this also means your returns could be lumpy and fluctuate year on year, right? Whereas if you invest in a bank FD, right, maybe because many people perceive it as a lower asset class, a lower risk asset class, and the reason is simply that there is no fluctuation at all, right? And because you have a deposit insurance, etc., so your downside is completely protected, right? On the other hand, there is not much upside because essentially the interest which you are earning is essentially the number which I told you, 7%.
There's no real returns.
There's no real return as such. So that's the risk, right? So also let's not forget that it's not just returns. So again, we just talked about returns, but in an asset class, for example, real estate, right? We know that real estate is not generally very liquid.
What does liquid mean, Christian?
So meaning that if you need to, for example, if you own a house, right, and if you or for example, if you have invested in your house, a residential property, suppose, and if you want to immediately realize the
value of the house,
right, by selling the house, it's generally difficult to do it immediately.
I know this from practical experience. I sold my parents' flat in Delhi last year. It took me the best part of 3 months and the use of 2 brokers to find a buyer.
Right. So, so this is the liquidity aspect of it. Now, if you compare this with listed equity markets, right, where if you're invested in any of the top 500 stocks in India, generally, you can, whatever you have invested, generally you can realize those proceeds, instantaneously. Right. So, liquidity is generally not an issue when it comes to equities.
Fascinating. You're saying Indian equities are giving you 12-13% nominal as an asset class historically over the last 20 years. So that means over and above inflation, 6-7% की कमाई प्रति वर्ष, and over and above that, Indian equities has high liquidity. जब पैसा चाहिए तुरंत आपको मार्केट पैसा दे सकता है.
Exactly. So this is not just returns, but essentially also the liquidity aspect of it, which many people tend to ignore. And let's not forget, in real estate there are other transaction costs, right? So for example, when you buy and sell real estate, there is obviously the stamp duty which you need to pay in most Indian cities, and then obviously plethora of taxes, right? Not that equities doesn't have those transaction costs, but when you compare it like for like, the whole sequence of transaction from buying a house to selling a house, right? Generally in most Indian cities, again the transaction cost as
very
such,
high, 5-6% निकल जाता है.
Exactly.
Right, and overall rental yield is hardly anything.
Exactly.
Right, 1.5-2%. That's gross of tax, net of tax. Rental yields will come out to 1-1.5%. So basically, you're saying the argument is quite clinching that from a long-term returns perspective, Indian equities is the most attractive asset class. Add to that, it's liquid and it's tax friendly.
Yes.
So the question then arises, Christian, how much should a typical Indian family allocate towards listed market equities?
Sure. So, so the ideal allocation towards equities, obviously depends on that individual's age, occupation, risk appetite, right? When I say risk appetite, it's a willingness and ability to take risk, among other factors, obviously. But these are the most important ones. So again, these are the factors which one should use for deciding, whether to meaningfully allocate towards equities. Because this is absolutely required, like we discussed, basis what we have discussed till now, if you want to maintain or even grow your savings net of inflation, right? For deciding on the exact equity allocation, many people use, a simple rule of thumb. So you just take the current age, 100 minus at current age, that can be used as a simple rule of thumb.
My grandfather passed away a decade or so back. He was 100 when he passed away. Okay. Right? So he used to keep asking me, how much should I put in? So as I explained in our book, Coffee Can Investing, and as I practice myself, what I do is whatever monies my family might need over the next 2 to 3 years, right? So say children going to university, some emergency fund for my wife and I in case we fall ill. So whatever money I might need for the next 2 to 3 years, we keep that in bank fixed deposits and liquid funds, because that's where we're not trying to generate income. That's just a rainy day corpus. The rest of our money we invest in Indian equities. Now, if I was retired and I didn't have monthly salary, then obviously my next 2 to 3 year cash requirements will be that much higher. But whatever age you are, I've explained this in Coffee Can Investing, and I've practiced it myself. Whatever age you are, I reckon अगले 2-3 साल का जो आपको पूंजी की ज़रूरत हो सकती है, आप उसको फिक्स डिपॉजिट्स में रखिए और लिक्विड फंड्स, and the rest of it should be allocated to Indian equities, because as you pointed out so nicely in the beginning of this podcast, Indian equities is the only asset class that gives you returns 6 to 7% above the rate of inflation. 12-13% की आपकी कमाई, ज़िंदगी बदलने वाले amounts, nothing else in the Indian stock market can match that. Thank you so much for joining us in this podcast with Saurabh.